Lots of questions, though, of course, between today and the 30-plus days until we get that election, and then the however many days it is until there may be resolution, if not on that day. How do you price in the market risk with all of this uncertainty? I want to bring in Laim Dalton, who's CEO and CIO of Axiom Capital. Liam, thank you for being with us. And that, of course, has surely got to be one of the hardest jobs for folks right now, is pricing in the risk with so much uncertainty out there.
Yes, that is definitely the case. We've had some very unique characteristics surrounding the market, particularly since the March low. One of the things to remember, I think, in an environment like this, however, is that the dominant drivers of price activity are not these sort of headlines surrounding elections or short-term fiscal or stimulus packages. It's really about the big wheel that's turning, and the big wheel that's turning is we've had a massive injection of liquidity into the market. It manifested itself in a large cap growth, high momentum rally. It was really something that I think we'll look back on and say, wow, again, the stock market proved itself to be a predictor and not a reactor. The short-term drop that we had in March as a result of what looked a lot like a healthcare natural disaster has now, the stock market's predicted that the economy will gradually reopen. As a result of all that excess stimulus money coming into markets, we had that gigantic move. And it now looks like it's beginning to cool off, meaning in early September, we got to what looked like very peak type valuations. We were trading in this growth sector at about 100 times trailing earnings. That's about 5 times the market's average. We had some signs of excesses in the momentum gauges that we use. And as a result, I think you can expect a more subdued environment. And as you mentioned, Amanda, these news items that now plague the market a little bit will create sort of more short-term moves back and forth. I think the market will oscillate around some of the psychology surrounding some of the concerns about elections and the stimulus package.
Liam, how have you been faring at Axiom, and what are you doing right now?
So we made a good-sized bet that this was actually, it's interesting, some of the holdings that we had prior to the pandemic hitting were holdings that accelerated upward at a much faster rate than we ever anticipated. In other words, we have a belief that we're in a secular growth phase in technology that is probably unrivaled by any other we've ever seen. So we were positioned in some of those digital platform names like Zoom, like DocuSign, like Microsoft, some of those big cap names that really had monstrous moves. What we're doing now, however, is in anticipating that we may have hit peak valuations and peak momentum over the near term, we've taken risk down slightly. We've taken some beta out of our portfolio. We think we're in for some choppy conditions over the next quarter. And we think volatility is likely to be a little bit trickier of an element now, because once we hit that crescendo in early September and we began to see some of the money migrating out of those high growth sectors, that was a sign that really those are the dominant market cap indices. They are so big and have such an effect on the overall market that we sense that we're now going to have a more subdued environment, if you will.